Okay guys, welcome back. Welcome to FX Beethoven Forex Algo Decoded. My name is JD. Today, let's talk about manipulation for directional bias, guys. This science, it is a science of reading candlestick, understanding a manipulation. If you have watched my video about manipulation before, you will easily understand what I'm going to talk here. So here, every time you open your chart, we want to study how you can identify the direction of your next candle that's going to come. So here, you will have your last area of liquidity. So when we say last area of liquidity, it is simply where market is gonna stop, the last area where market will stop grabbing liquidity and make a reversal. You have to know that. So here, the science here is to try to read the candlestick, the behavior of your candlestick, how one candlestick forms and how it manipulates another, and then you will immediately see the direction of where the rest of the candle is gonna go. So here you have a bullish candle closing here before market reaches your last area of liquidity. Now a new candle opens. A new candle will open here. A new candle will open on the same level here. So this candle, this red candle, bearish candle, trade the higher on this area and then start rejecting and then closed below, taking what? Taking a previous candle high right here. So when we see this, this is what we call manipulation. When we see this, this is what we call manipulation. So we are supposed to see a candle going down and engulfing the previous one. So we say we have got a full manipulation. So if it doesn't happen and it closes something like this, so we call it attempted manipulation. It was attempting to perform what? To perform a full manipulation. Now here, as long as we see this manipulation from our last area of liquidity, now we know the next candle after this one must be a bearish candle. Again, you have to always wait for a candle to close. That's when you will have complete information about your candlestick, about what is going on. So you understand? So we expect what? We expect another candle that's gonna open here to do what? Maybe to test this zone, and then trade lower like this. We want to see a candle trading lower. We want to see a candle trading lower. So you have to understand this. You have to understand this. We want to see a candle closing low. So we want to see a candle like this forming. Hope you really understand what I mean. So here you look to enter when the new candle opens on lower time frame. So let's say this is a daily time frame. So every candle is a daily candle. So if the previous candle, this one, has traded within last area of liquidity and performed the manipulation, then the next candle is gonna be bearish. So you wake up in the morning knowing that today is gonna be a bearish day. Today is gonna be a bearish day because you have got the information you want. You've got the information you want. Today is gonna be a bearish day. So let's see some examples. Let's see some examples on our chart. So you understand this. So if you are bullish, something to remember before we go, if a new candle forms, for example, trade lower, and you see it performed what? They performed another manipulation to the upside here, like this. It manipulated what? It manipulated the low here and then made a rejection. So we call it negation. It is negating a previous move. It is negating what? A previous move. This means the next candle here is likely to be bullish, and it can easily do what? It can easily take the high again. It can easily take the high you have here. Maybe if market did not fully meet the last area of what? The last area of liquidity. It can do something like this. Trading higher, taking the previous this high. After taking this high, then it is start doing what? This, for example, it is start rejecting. They start, for example, rejecting something like this. Hope you understand what is going on here. Hope you see what I'm trying to teach you guys. So this is how you determine the bias of your candlesticks. This is how you determine the bias of your candlesticks. So here, if for example you look at GBP USD, let's say on a daily time frame. GBP USD on your daily time frame. So here, let's say this is gonna be the weekly open. We want to sell, for example, the weekly high. Let's say this is a weekly candle. These are weekly candles going down. These are weekly candles going down. This is the first week. This is another week. For example, this is another week. So let's take some examples here so that you can easily see what is going on. So you go to daily time frame. What are you looking for? You want to look for ways to sell the high. You want to look for ways to sell the high. You want to look for ways to sell the high. So you understand what we are looking for. We want to sell the weekly high because we are bearish. We want to sell the weekly high because we are bearish. Now let's switch to daily time frame. On the daily time frame. Now on this daily time frame, as you see here, for example, let's say for example you have imbalance resting here in this candle. You have imbalance. So market is doing what? Market opens with a gap, as you can see here. Then it trades higher on this level. After trading higher, it is started doing what? It is started rejecting the top. So if you see this rejection, as you can see here, this rejection, if you see this rejection, this means the next candle here is gonna be bearish. The next candle here is gonna be bearish after trading within this area. Right? So if you go through a time frame, you may find what? For example, imbalance resting here, another imbalance resting here. Market is using it, is looking for it as the last area of liquidity. Remember, imbalance is a part of liquidity. Now market is doing what? Market is rejecting. So you need to wake up the morning thinking that this day is gonna be a bearish day. So you wake up looking for what? Sale opportunities. You wake up looking for what? Sale opportunities. Now this is number one. So here you've got another move. market is attempting to manipulate what? The bottom here, the bottom of this candle. Then this means the next candle is gonna be bullish. The next candle is gonna be bullish after this manipulation. Then after this, as you can see, if you look here closely, you can see how this level has taken this low. So why is this happening? Because look at here, I'm gonna remove this line so that you can easily see candles. So it tried to push price higher. After pushing price higher, it traded higher all the way here and start rejecting. This rejection is what we call a self negation. Is negating what? Is negating a previous manipulation. This was a manipulation. Market went higher, and then immediately we saw a strong push to the downside, right? Then after pushing down, a new candle is gonna be bearish. So after this new candle, it took the low, it took the previous low, as you can see here. It took the low. Hope you can see. It took the low here. It took something out here. So after taking this, immediately it made another rejection. It made another rejection, pushing higher, manipulating the previous one. So we have another manipulation going on, meaning after manipulating this level, this becomes a target liquidity. This high becomes a target liquidity. This high becomes what? Becomes a target liquidity. So after targeting that liquidity, market is trading what? Market is trading within this area. If you go here, you will find imbalance resting there. Imbalance resting there. So once market is done trading within this area, you can go there, you check, there will be some form of imbalance or something else the market is going to use as the last area of liquidity. As the last area of liquidity. If you keep checking here, you will see. Now here, what is going on now? If you go to, maybe I want to make it clear for you guys. I see that I have I don't see enough details. Let's check. Only 15 minutes. So there is no details, because there was a strong weak rejection. Market is feeling the weak, taking our liquidity level, that's the area of liquidity. If you know manipulation, this type of doji being taken before market makes a reversal, this one. So we will not go into those details. After market cleaning out all of those doji, it's gonna give you a rejection. So what matters here, we are trying to spot what? The direction of the next candle on our daily time frame. Now here, after market has grabbed what? Market has grabbed our liquidity on that level. The candle made what? The candle made a rejection to the downside, manipulating the high here, the high of the previous candle. As you can see, manipulating the high of the previous candle. So after doing that, after seeing this manipulation, you wake up in the morning knowing that this day is gonna be a bearish day. This day is gonna be a bearish day. So you wake up looking for what? You wake up looking for a sell. You know market will be performing what? A retest on the manipulation, and then it will be doing what? It will be dropping down. So when I say a retest, it is this week. So market will be manipulating the high. Market will be trading higher before going down. If you understand the Asian manipulation, you will easily understand what I mean. So here, this is how market manipulate. This is how you can detect the direction of the market using what? Using this concept. So let's say for example, the next week, in the next week, for example, we are in area of manipulation. We expect the market to test the area of manipulation right here. So now, meaning you can expect that you can expect for example a push, then we go down. For example, if you wanna sell the weekly high, so we have what? You have your imbalance left behind. For example, you have your imbalance left behind. So what I'm gonna do when a new week start, I will wait to see if market is gonna give me what? If market, for example, is gonna manipulate the bottom to trade higher. Let's say for example, market manipulates the bottom to trade higher. It creates, for example, a bullish candle that manipulated the bottom. That manipulated what? That manipulated the bottom. For example, like this. It took the low of this candle and then manipulated to the upside. It's trying to go higher. So once I see this, I just wait. Then, for example, this is Monday or Tuesday. You're gonna see, for example, Tuesday trading higher, trading within your zone. And you check through a time frame. For example, you identify the true stop of it, the true stop, last area of liquidity for this day. Then, for example, you see a rejection like this. Once I see this, immediately, then on Wednesday, I will be looking for what? I will be waiting for a retest to happen. A retest to test this attempted manipulation. So a retest to happen here, and expect what? Expect a candle to be a bearish candle. To be a bearish candle. To be what? To be a bearish candle. This is how we go about manipulation, guys. This is what we call manipulation, spotting the direction of bias using what? Using the concept of manipulation in the last area of liquidity. So something you have to invest your time in is to identify what? To identify your last area of what? Your last area of liquidity, and being able to read the wicks and being able to wait till a candle close. Hope you understand. You can avoid selling this day. You can sell one day, for example, on Wednesday. Once you are done, identifying what? You are done identifying direction. So here, for example, on H4 time frame, if you come here to H4 time frame, so you may end up seeing what? For example, you may end up seeing like you have a beautiful liquidity resting here, expecting market to take out this doji. So after that, you have what? You have a POI, for example. Let's say this is this manipulation. You understand? Beautiful manipulation right there. Now here, so if market is testing, for example, this level, let's say something like this, and the day gives what? Day gives a rejection, and it closes as a manipulation, and it closes as what? As a manipulation to the downside. Then the next day here will be retesting and will be a bearish day. Hope you fully understand this concept. And until you see a negation negating this move, if there is no negation, then this candle is gonna go down. When I say negation, is when this candle trade lower and then reject the bottom. For example, doing something like this. This is what we call a negation. So you have to pay attention. when you see something like this negating this previous manipulation, then you know today is likely to continue to go higher. So this is something you have to remember when you are reading a candlestick. So maybe if you need details, maybe I'll create another video, or you can message me for details. But this is how you can read the manipulation and spot the direction of the next move. Very easy. And you have to avoid using what? You have to avoid using lower time frames. Lower time frames are for entries. Just use higher time frame like daily, weekly, just to spot the direction. Daily, weekly, 4 hour. You understand? So the same, this is what we call a retest. The market is retesting the zone, a sell, a retest, a sell. The same here will happen, right? So thank you very much, guys. Until next time, guys, good luck and good trading. And make sure you check in the video description, you click on our link to our Telegram channel so that you can follow us, guys. Thank you, guys, and keep subscribing, keep watching the video, keep sharing it to your friend. See you soon.